Yes. Hello, hello, hello. Tim, am I on? I love you. I love you. Everybody out there, all over the world, watching us, welcome to the Tuesday Big Show, the live stream. We're all here. We're feeling phenomenal. We had a day recording today. We're feeling great. Paul's looking great. You're down. You're svelte. You're looking wonderful. Mo's always looking svelte.
Hello there.
Our dear Brown.
That's my motivation, by the way.
Look like Mo.
My motivation is you always compliment Mo on the way he looks. I want to match it.
You'll get there one day when you're old and gray. Let us know how the sound is, folks. We tweaked some things in the studio.
I'm going to look awesome in 3 months.
If the sound is not sexy enough, then give us a little note and I'll fiddle with it. But we are here. We're welcoming you in all over the world. Paul, we're so used to saying patrons, but in reality, it's now the Everything Money community. We're working on a nickname. I wanted to call you guys the Everything Money Makers, but we thought that was too cliched and cheeky. So we're going to come up with something. But regardless, if you're part of our community on everythingmoney.com or still a patron, we welcome you in, of course. And for new viewers and subscribers, if you found us reacting to your favorite YouTuber, we welcome you into the show. And yeah, we're great. Paul, let's chat about an update from you on the market, on your thoughts about where we're at, where we're sitting, and where we can go from here, Paul.
All right. Well, first off, guys, you guys know the drill. Follow us on Instagram at Paul Gabriel, at Trader Mo _EM, and at Seth Kirchanan.
Yes.
And Seth is, if you need to find his name, just look at mine because it is a weird spelling. So guys, the market, I want everybody to understand, like, I literally don't look at the stock market at all, basically. I mean, I'm training myself, as I have in the past, of saying, I don't look at my real estate values on a daily basis, but I look at my stock values. I wait for news to come out that alters my holdings, right? And there's a lot about Alibaba out there, and it is concerning, but the more I look into it, I'm still okay holding my position. I only have 1% of my money in Alibaba. I want to build it to a 3% position. I have puts. Is it scary because the stock has fallen? Of course it is, but remember, when fear is highest, that's when you can make the most money, as long as your analysis is accurate, right? So, is Alibaba, I think Alibaba is being priced for basically not making, I mean, it's priced for losing like 60% of its profit.
Right.
And growth is collapsing. I don't think that's realistic. Is it possible? For sure it's possible, but that's why I believe in owning 20 or 30 companies. That way it can be a little more, there's a lot of value investors out there who want to invest in 5 to 8 companies and know them inside and out. I'm too lazy. Don't feel bad for being lazy. As long as you stick to your parameters that make sense to you, you'll do better as long as you're absolutely sticking to it. For me, I want to go a little bit step further when I pick my individual stocks, but Mo and I have our own magic formula kind of investing that we're going to start in January that involves different metrics that we like, and we're going to buy the stocks blindly, just like the magic formula does, but we're also going to have our separate picks that we pick ourselves. So keep that in mind, guys. Just remember, the market is telling you every single day what they think it's worth. That doesn't mean it's actually what it's worth, because in the short run, stocks are a voting machine. In the long run, they're a weighing machine. So if people are scared about China's regulations now, that's driving every Chinese stock down. So my question to you is every Chinese stock all of a sudden worth half? I don't think so, but that's the way it's looking to a lot of people, and they get worried about it. And I'm still, and Alibaba increased in July its share buyback program. I just feel very comfortable with these things going forward.
People are saying, Paul, that this one-time Alibaba donation to the government is. My fear is, well, when will this end? If it's just okay to do once, when will they keep demanding this or simply take control?
What happens in the U.S.? This happens all the time in the U.S.
It happens all the time in the U.S.
It's called taxes every single year.
It's just in a different form.
It's just in different form. That's all. It happens every single year in the U.S. Oh, these people make a lot of money. Let's tax them more. And companies still do well here and can still grow. And China's still a developing country with only $10,000 or $11,000 a year per income capita. We're at 60-some thousand a year. And they have 1.7 billion people. I just think there's a lot more growth potential in Alibaba within China.
Yeah, that's what a lot of people forget, is that they are developing. So for them to become developed, like us, for example, they need to do things that are going to get them there. And this is just part of it.
Yeah, Nick is right. You think Baba is a Chinese company. Wait till you hear about Nike. That is hilarious, actually. So So yes, we are taking donations today. If you want to request an individual stock, we require a $50 donation. This goes to a charity.
50 US.
50 USD. This goes to a charity. This week's charity mo is whom again?
Let me pull it up here. It's can you see it?
Yes.
Yep. Halo Non-Kill Shelter. It's in Florida, so they find animals and they don't kill them. And it's wonderful.
Paul, you support kill shelters, don't you?
Yes, I do. I actually have 3 kill shelters in my house.
He owns some also.
I just buy dogs. I'm just kidding. I have 4 dogs, guys. If you follow my Instagram, you'll see them. I adore them. I love them. They live better than you do.
That is true. So if someone wants to chime in with a request.
Literally, I have a dog room in my house for my dogs.
You know, Paul, you talk about diversification in your portfolio, but Warren Buffett in speeches from years ago is not a huge fan of it. Where do you sit on this idea?
Well, remember, there's multiple ways to skin a cat. A lot of very deep value investors who want to go very intimately into a company and know the ins and outs of it, everything, they're okay owning 5 or 8 businesses. But think about it, guys. Your neighbor who owns their own business, they're not diversified. They own one business. Probably the majority of their net worth is tied in that one business. That's okay because they know the business inside and out. But for me, I prefer to own 20 or 30 companies that fit a certain parameter. I'm gonna be wrong on 20 or 30% of them. I'm gonna be just gonna do even better on 20 or 30% of them than I thought, and the rest of them are probably gonna do around where I thought. And my goal is to beat the market by a few percentage points a year, and then use options to get even more return. My good friend Gary Mashuris, who I've invested in, he can beat the market by 6% a year over a 15-year period of time, but he is doing such intricate deep dives. He's talking to ex-employees, customers. I'm not doing that. Call me lazy. You know, there's levels of investing, right? There's the average person, and the average person here is at the 100,000 foot view, right? There's ETF investors maybe right here. So they're probably at the 10,000 foot view, right? There's me at the 100 foot view. And then there's Gary at the 1 foot view. You know what I mean?
1 foot or less.
Or less. I mean, Gary is so intricate. I'm not willing to do that. Am I willing to do the extra work to get the 3 or 4% extra he's getting? No, I'll do that with options because I understand options. They speak to me. Gary doesn't do options. So this is where you have to decide where you're at. Right? And I'm okay being there and sacrificing return. You know, Gary used to always say to me when he was talking to me, go deeper. I don't want to go deeper. I just don't. I have no desire to sit there and figure out, because I do believe there's a certain level for me to be paralysis by analysis, right? I want to find the glaring issues that immediately make me say I don't want this company versus the intricate, you know what? The head janitor had a bad bowel movement.
I know where you're going
lunch.
with this. I have a reaction video queued up for you, and the guy goes into a deep dive. It's an older video about Workhorse because I love looking back at what people used to say about these companies that have flopped. But he said he did 8 hours of research on the company, and in the entire video, never described a single number. Never talks about what they're actually
I once
making.
had a guy in 2000 tell me he researches companies for 8 months before he buys them. He bought GE. Go look at how GE's done since 2000.
I mean,
that was his big brag. I bought GE. I researched GE for 6 months before I bought, 8 months before I bought it. Congratulations. Never once did he mention financials to me. I go, great. I could probably research a company for 5 minutes from my 100 foot view and have a pretty good, not 5 minutes, probably 1 hour and have a pretty good feel for the company. Because the 10K does take a while.
Yeah, I mean, don't you just normally start with what do they make? I mean, when someone queues up a company, I'm like, well, what kind of money do they make? That would seem like the common sense is what are they doing and what do they make? But they never even bring it up in some of these hype stock.
Well, why should you care about profit or earnings or revenue? Why should you care?
I guess you're right.
I mean, that's what everybody says. It's well, they have got potential. All right, great. And by the way, I always talk about the dilution. The dilution, there's an Instagram account that one of my followers sent me. They said, share issuance is the silent killer. I'm like, they stole my line, but they have 170,000 followers, so they probably didn't. But guys, share dilution, if a company has $10 in profit and it goes to 40, the average person would be like, oh my God, it quadrupled. But what they don't realize is maybe the company had 10 shares and they went to 40 shares. Guess what happened? You got no benefit. The company's profit went up 4 times, but per share, it's still $1. It's still $1. That's why share dilution is an important thing to look at. That's why share buybacks are an important thing to factor in when looking at a company. And that's why I like the fact that Alibaba is buying back their shares. It tells me they're taking their capital and putting it back in there and saying, hey, we believe our company's undervalued. We're going to take our cash and buy back our undervalued shares. And essentially, get a return on our money.
Mike Tsai chimed in with a $50 donation. He said, "Hi, Paul and Everything Money team. I've been a big fan. Thank you so much." Sorry, not of us, but I love you. TSM. This is Taiwanese Semiconductor. Paul?
Yep.
TSM is the company, Taiwanese Semiconductor Manufacturing, obviously a foreign company. And because we have a donation going to this Moe's charity this week, we will get after this using our 8 pillar analysis. If this is your first live stream, we welcome you in. Check out how we use 8 pillars to look at the financials to see if this stock price is justified. So, Paul, let's get after TSM. This is some sort of sexual thing, isn't it, Mo? You would know.
TNA, $640 billion market cap, 5-year PE of 43.7. That's an X because we want less than 22.5. We do have a 5-year return on invested capital north of 9%, which is our goal. It has 9.5%. And here's an issue I have. Boom, dividend yield, 1.5%, $9.4 billion. Their 5-year average free cash flow is 7.6. Last year they did 9.26. So they're actually giving more in dividends. That is a question for me. Why do they have that? Their free cash flow was 7.6 on average.
Are you saying they can't afford their dividend?
I'm saying that's depleting all their cash.
Okay, keep going.
35 versus 52 billion.
This is pillar number 3, revenue growth over the past 5 years is a check, right, Paul?
Yes, check mark. Profit 12.6 to 19.75, check mark there.
Okay.
So look at this. I will also say this. What's the average over the last 5 years here?
This is profit?
Yeah, roughly 16, right?
Yeah, ish.
15?
15, sure, okay.
Guess what? Their average free cash flow is 7.6 over the last 5 years. So double, their earnings are double their average free cash flow. I don't like that.
Why is that?
I don't know.
No, why don't you like that?
Oh, because free cash flow and earnings should be pretty equal over long periods of time. So why are they showing much higher earnings than cash flow? That's an alert to me. That tells me what's going on here. Enron did the same thing. I'm not saying this is an Enron. I'm just sitting there saying these are some of the things you need to look at to question things. Shares outstanding, the exact same, 5.19 billion. Let's see their free cash flow. Yeah, all over the place. I don't like it. It's another balance sheet. We look at their total long-term liabilities of 16.29. 16.29, let's call it 16.3. Their average of 7.6 billion in free cash flow over the last 5 years. It is 2.2 to 1. So that's a check mark because we want less than 5. So they have plenty of free cash flow to pay off their long-term liabilities. We go to the cash flow statement. And guys, as you know, we add this line for all of our users here. 5.3 to 9.26 check mark with an average of 7.6 billion times 20. This is what we're using to figure out. We're taking our 7.6 average times 20, which by the way, I might increase this to 22.5, but we'll talk about that later, is $152 billion.
Yeah, the actual market cap is 640.
Yeah, so it needs to drop by 75%. But guys, my biggest concern in this company, where I go, I don't want it anymore, is the free cash flow versus income. Let's go back even further. Seth, you want to pull out your calculator?
Oh, well, this is where I specialize.
Actually, I'll just do it.
No, I got it right here.
No, I got it. Don't worry.
I'm really good
Peanut,
at this.
I got it.
Let me find the app on my phone.
Put it on my phone. 4.96, 6.34, 7.23, 11, 10.17, 12.58.
I would have done this
12.75, 11.46.
Find all that thumbs up
16.43, 19.7. Okay, guys. So in the last 10 years, they've generated $112 billion in earnings. So now I'm going to go to the free cash flow statement. How much free cash flow have they generated in the last 10 years? Let's go look at that.
Okay.
9.26, 4.41, 6.26, 12.72, 5.33, 7.92, 11, 2.35, 2.75, 62 billion, almost half. I don't like it. How is it possible that their free cash flow over 10 years is way, way lower than their earnings? I'm just immediately avoiding it. If somebody came to me and said, Paul, buy this business from me, I'd be buying it for, if I was even I wouldn't even trust the numbers. I don't know why these numbers don't even make sense. There's probably a valid reason for it. But my personal opinion is, I don't care. It's overpriced, and the free cash flow and earnings don't make sense. I'm out.
If you're in the bid and ask nation, or if you're interested in trading, Trader Mo, what's going on with this Taiwanese semiconductor company?
So this thing went for a heck of a run, and then it's just kind of completely plateaued and hit a it's just hit a consolidation area. So if we actually zoom out further, we can see that this thing was a power stock for quite some time. It was overall 4 major moving averages. And for the past, the majority of the year, it's just been stuck between these areas. So what's it going to take to break out of here?
Engulfing candlestick.
Really good news and a lot of volume, and a lot of very consistent volume. Other than that, I don't really see this thing going anywhere. Because, I mean, look at it. It's really been range bound between $112 and $130 for the better half of the whole year through February. So to me, I look at this, you can swing it up and down in these little areas that I drew, but to me, I bet this is probably a pretty good day trading stock. I mean, the average volume is probably 15 million shares traded per day.
So that many?
Yeah. So I think it probably gets some good volatility on it.
Go ahead, Paul.
Somebody wrote, look at their capital expenditures from factories. Very logical point. So then I'm going to sit there and say, fine, let me go to depreciation. Is depreciation skyrocketing? So depreciation is going to be the difference between EBITDA and EBIT. That's the D in depreciation and amortization. Where is the difference here? 14 billion, 10 billion, 11 billion, 10 billion, 9 billion, 8 billion, 8 billion. It's not jumping up enough where it makes me go, this makes sense. Yep. This is not jumping up enough for me to go, okay, depreciation, because if you're building factories, you're depreciating a ton, right? If they're building factories every single year over and over, this depreciation should be like 8, 9, 10, 11, 12, 13, 14. I see this growth going up, but I'm seeing flat. Now, I did see a jump here, but before this year, it was all flat. But if they've been building factories all along the way, this depreciation should be increasing over time. Even over here, I mean, 6 billion, 5 billion, good, 4 billion, that's increasing, but then it flatlines. It could very well be the answer. It could very well be the reason why. Don't get me wrong. However, with the overvaluation just from earnings and this, I'm out. That's it. Very simple.
It's a no for me, darling.
Yeah, it's a no for me, darling.
All right, Mike, thanks so much for the donation and for your interest in TSM. We love you nonetheless. Let's do our second one, Paul. Robert is asking for the ticker symbol CMI. CMI is, of course, Cummins diesel engines. These guys make the big trucks. Cummins, the lead manufacturer of diesel engines. Boy, Paul, they do not buy my product, DGF, and they need to. I'm going to write this down. I'm going to email them. Cummins makes diesel engines. I have a product that goes in engines, and they would love this. Commercial trucks, off-highway equipment, yada, yada, yada. Everyone knows about this company. If you haven't, check it out. Paul, let's use our 8 pillars right meow and get after Cummins. What's the market cap, baby?
34 billion, 5-year PE of 18.7. That's a check mark. It's less than 22.5. 5-year return on invested capital, 12.4. Check mark there. So we want over 9. So this is good start so far. Now let's look at dividend. 2.3%, so almost double the market. 800 million in dividends paid. Their 5-year average is 1.9 billion. So less than half of their free cash flow the last 5 years is being used on dividends. And last year's free cash flow was 2.7 billion, and they only spent 800 million. So far, I'm liking all of this so far, okay? Let's go to income statement. Revenue, 18.4 to 23. Look at this bumpiness though. Did they buy division? Did they buy companies? Did they sell some off? What happened there? Let's keep going.
Okay, how about profit growth over the past 5 years? Is pillar number 4, Paul?
Check mark, 1.5 to 2.2.
Check, please.
And then shares outstanding, okay, 167 down to 145. Check mark there. So they're buying back shares on a not overpriced company based on earnings PE, right?
If you're new to Everything Money and this idea of looking at the financials resonates with you, you can have the software behind Paul. You can make better investing decisions, look at the companies, analyze them in the palm of your hand by joining everythingmoney.com or our Patreon. They both lead you to the same place. And you get this wonderful Discord community of 5,500 people chatting about these very companies we're talking about, whether it's value investing or trading with Mosif in the bid and ask. That's what we're talking about. You can get the software right now. Click the link below. Paul, let's do pillar number. Did you do, are they buying back shares?
Yes, they are.
Thank you.
1.9 billion in free cash flow over the last 5 years. Our next metric is we want the long-term liabilities to be less than 5 times this amount. 1.9 times 5 is 9.5 billion.
Sounds right? About right, yeah.
9.5 billion. So then we go to the balance sheet. We scroll all the way to the bottom.
Go ahead.
7.2. So it's a check mark there. That's solid. They're about 4 times, they're less than 4 times their free cash flow is a long-term liability. So I love it. The cash flow statement.
Pillar number 7.
And I keep forgetting to show our 8 pillars tab.
Yeah.
1.43 to 2.68 check mark with an average of 1.9 times 20, 38 billion. What was our market cap?
34 billion.
Oh, so we have a check mark there too.
Hold on a
Is this
minute
all
now.
8 checks?
I think they are an 8-pillar stock.
Is it?
Yeah, I flipped through. I think I saw them on there last week when I checked.
Well, suck me sideways and call me Betty.
There you
Look
go.
at this. All 8 pillars right here. All right, so let's go and do a stack analyzer tool as Mo does the chart, and we'll go from there.
So if you're new to us, we use the 8 pillars to say, are we interested? Then we'll go look at a 10K. We'll do some research on what their ins and outs, what they're building, their future. But if they don't make any money and they're selling off gajillions of shares, we're not interested right off the bat. So we just saved ourselves hours of time. But what we'll do, so we'll come back to the stock analyzer tool. You get this tool as well if you buy our software. Mo, are people trading Cummins over there? What's going on over there? Oh, look at this now.
I mean, it's probably a pretty boring stock to trade. This is definitely a dog stock. It's just sitting there. It's probably not going to drop much lower because there's a resistance point. And well, I shouldn't say that. I redact my statement because I
Okay.
think that right now it's below all 4 major moving averages, and it has moved down there. Now, it's dipped below all 4 major moving averages several times over the past 3 or 4 months. So it's not the worst thing in the world. They usually hold that support level, but if this thing does get down here, then you have a good short on your hands. Right now, I wouldn't short it. I would just, this seems like a really boring stock to trade, I have to say. What's the volume? The volume's under 1 million shares traded per day. To me, I'm going and finding something
What percentage
else.
of companies
I know what you're going to ask. I don't know.
Well, let's look it up. I mean, I think we can do it through
You can probably look at through
Y charts.
charts.
Yeah. So, guys, here's our stock analyzer tool. This is what we use at the next step. Now, I did look at the cash flow statement. So I wanted to look at this, guys. The cash flow statement will tell me what acquisitions and dispositions there were. And relative to their revenue, there isn't much activity. They're not making major acquisitions here. So the fact that their revenue jumped and then fell back, I don't know if that's something to worry about. I believe in looking at the cyclicality of stocks. If a company's in a cyclical business, don't buy it at a very strong point in the cycle. Buy it in the bad points of the cycle, like Carnival Cruise. Buy it when travel is down a lot. Home builders, buy it when people aren't building homes, things like that. I don't believe in buying them when everybody's doing the major thing. But either way, we'll start our stock analyzer tool. Over the last 10 years, the revenue growth has increased, but overall, it's on a little flat trend. So I was conservative, 1, 2, and 3. Share buybacks. My profit margins, my PE and my free cash flow multiples, my returns right here, hit analyze. It's expensive. I have a price around 180 to 190 to 233. If my high assumptions are correct, it's worth it all day. You'll probably make 11% of your money at these levels, 12% at these levels if the high assumptions all happen. So it's probably around 180, 170, 180, 190 stock, something like that. But do more research on it. Any of these numbers can be changed big time. Their revenue is increasing big time. I mean, it's changed. So let's say they get back to a regular revenue path. All right, it's pretty close to it. Maybe it's a $200 stock if you can get 4% revenue growth over the next 7 years. So that's the thing about assumptions. But it's just going to show you the stock is probably expensive right now, even when taking assumptions here that might be more valid.
So, folks, just to recap, is we want to take the final piece of the puzzle. Is if we like our 8 pillars, we want to use the stock analyzer tool to figure out what price we want to pay. And again, this is price and return over the next 7 years are sort of codependent. So if you want a bigger return, you just need to pay a lower price. So it doesn't say we think it's worth this kind of stock. It's just if you pay more, your return's not going to be this. So just be cautious in using that.
If God came down tomorrow and said,
go ahead,
you're going to sell your house in the future for $1 million 10 years from now, it's going to happen. This is the way I view stocks. At some point in the future, over a long run, there will be a price here that makes sense. Are you going to make more money if you pay $100K for it or $300K for it?
I know this is simple, folks, but it took me a while to grasp this.
It's just the less you pay, the more return you get. Because the house is going to be worth what it's going to be worth. The stock is going to be worth, the company's going to do what it's going to do because the company and the stock are different. Now, is there ideas of self-fulfilling prophecy where all of a sudden stock falls and people stop buying the product, and therefore there is some evidence for that. But in the meantime, you want to see these disconnects here. And I just sit there and say, I'd rather pay a lower price. Now, what's that lower price? It's based on my return. And that desired return is what you're asking for. I want to make 12.5% a year. You type that in, and over 7 years, if you pay that price, you'll make 12.5%. Okay?
That's our take on Cummins.
I think we're done with taking.
No, we have 2 more, Paul. Just
No, I know, but we've had like 5 requests, I think, haven't we?
I think we've only done 2
No.
so far.
No,
How
we
many
can't
have
take
requested
anymore.
it?
We need to. We can take 1 more. We've had 4. We've had 4.
Okay, so 1 more stock. That's it, guys.
Again, guys, we appreciate the $50 donations going to a shelter, a charity of our choice, which is Mo's No Kill Shelter. Ladislav is asking for GNTX.
Wait a second. William Donahue. I went up to Paul at the airport and say hi. I said, "What's up, Paul?" Turns out it wasn't Paul.
Oh my God! I'm sure he was brutally handsome. Wow. So they're seeing.
All right, which stock am I doing?
They're seeing you in their dreams, Paul. The stock is Gentex Corp. The ticker symbol is GNTX. Gentex Corp. That is founded in 1974 to produce smoke detectors, Paul. Of course, the company sold yada yada yada. Sales in 2020 totaled 1.7 billion. Wow, and they are based in Zeeland, Michigan, Paul. You're very
Automotive revenue is about 98% of total revenue. So smoke detection for cars.
Cars have
The company
smoke
sold its first
detectors?
glare control interior mirror in 1982.
wow. Okay, interesting.
Okay,
Let's use the 8 pillars and get after it. What is the market cap, Paul?
$7.6 billion. 5-year PE of 18.95, check. 5-year return on invested capital, 20.8%. That's a chickadee check. We have a 1.5% dividend paying $117 million, which is significantly lower than the 5-year average free cash flow. And one thing I also like, guys, is last year's free cash flow is very close to the 5 years. So you're not seeing these massive fluctuations. You're also probably not going to see much growth either. But that's fine, because less growth means less sexy, means less attention, means better deals, in my opinion. So far, 2 checks, and I like the dividend. Revenue, not very sexy. Look at that, 1.75 to 1.92. Check mark. Okay. Net income, 366 to 460. Check mark. And shares outstanding. Wow, shares outstanding, 286 down to 238. And they really started buying shares back 5 years ago, because look previously. It was very little buyback here going on, right?
Love it. Yes, great. Keep
Balance sheet. So remember, guys, we go to look at the free cash flow of $414 million multiplied by 5. It's roughly $2 billion. So we want the long-term liabilities to be less than 5 times the 5-year free cash flow. The 5-year free cash flow is $414 million times 5 is 2.07 billion. We'll call it $2 billion. We go down to the bottom. $54 million. In fact, guys,
Wow.
their current assets are $924 million. The total liabilities are $250. They have $700 million in extra cash flying around. So that's a quadruple check mark all day long. So excellent there. This company, it's very difficult for this company to go out of business based on the balance sheet right there. Very, very difficult.
Interesting.
They can pay off all their long-term liabilities in about 7 months.
Pillar number 8, Paul.
Free cash flow.
Let's come up with a market cap.
363 to 472, check mark.
Engulfing candlestick.
And the average is 414. 414 times 20 is 8.28 billion.
Actual market cap
7.6. Less the $700 million they have there, so call it $7 billion. It's a check mark. This might be all 8 checks.
Check it out, baby.
All 8 checks. Look at that, guys. Look at that.
8
So now
pillars.
this is a car business driven by car sales. Let's remember the car sales have been very active recently. So factor that in. This is a cyclical business. So definitely be more conservative than other businesses. Let's go to the stock analyzer tool after Mo does his shtick.
Well, they do. This is all new car stuff, right? New
I
cars.
assume so, yeah.
New cars have been hit pretty hard lately. So, I mean,
Well, no,
the
the
used
orders
car
are so
market is
huge.
going crazy. Well, I think the orders could be even bigger than they are if people could actually go buy a car. You know what I'm saying?
Oh, maybe.
I can't imagine people are trading Gentex.
Actually, I like this one a lot. I really like where this trend is going right now. But over the past,
Would you say the trend is your friend?
I would think so, Paul.
this decline is good. I mean, it's been a steady decline. But if this thing can just roll up and get into the sweet spot, I'd be happy with that. Also, I looked at the daily chart, and so it's dropped below all 4 major moving averages a couple of times. But same thing, it's pulled itself back up each time. So with pretty decent volume, it's over 1 million shares traded per day. Just needs volume to get through the sweet spot, but I like this one. I'm going to put this in the watch list for the bid and ask.
The bid and ask.
The bid and ask.
All right, guys.
GNTX?
So I went very conservative here.
Go ahead, Paul, with the stock analyzer tool.
Yeah, I mean, because it's a cyclical business. I mean, I just wonder about revenue growth. Even though they've had it, I still went conservative on everything. It's a smaller company, $7 billion. The automotive industry is going through a lot of changes. Now, granted, this is mirror stuff, so I doubt mirror is going to have some major technology change. Maybe I'm wrong. I'm probably wrong. But if it does, they'll probably be on the forefront of it. $32 stock. So even though it's all red, it's not terrible. Like, it's probably selling for about where it should be if you believe all the high numbers. And if you want it to be in a little, maybe it's somewhere between 20 and 25. So it still needs to pull back a little bit. The current PE is 19. I put a very low PE on there, and the reason being, there's no growth in this company. There's a lot of competition in the automotive business. I just want to be more conservative on this company. And I'm hoping they buy more shares back, a lot more shares, and I'm wrong. I assumed, I think, a 2% buyback growth in the middle. Yeah, I did. And that's what they've averaged the last 10 years.
We have some fans of Gentex in here. D-Snave.
Oh, good.
Yeah, this is good stuff. All right, folks, as always, if you join everythingmoney.com, you can have the software behind Paul. You can join Mo in the Business Nation every day. You get live video updates every day. You can join the Employed Trader series on Make a Few Trades. And we've had some friends, Mo, some of my friends who I talked about before were very, very hesitant about investing anything. And of course, yesterday or 2 days ago, we had him over for the Browns game, and he's talking engulfing candlesticks and making trades. He skipped the paper trading, went straight to the good stuff.
Yeah, he went straight to it. But he watched the Employed Trader series twice, or what's it called?
Yeah.
Trading 101 series.
Trading
he watched
101
it twice,
series.
so that was good.
Yeah, so interesting. All right, that's our take on Gentex, folks. All right, we have one more, Paul. Let's see what else. Oh, wait, maybe a couple. How do you say that name, Paul? You see it in the blue there. What is that?
That's definitely not enough to get you a donation, a stock, though.
Yeah, we're at Dr. Marcelino. We're asking for a $50 donation to a charity today, and so you're almost home there.
But we can't do Visa anyhow. So he said, I want to replace Visa with Baba. We have lots of Baba videos lately. Pick another stock.
Yep. Okay. Let's keep going.
And donate $50.
Let's see what.
Next one is HNST.
Yep. Thanks, Tim. HNST.
Is it an honest company?
Joseph is asking for HNST.
Isn't that, what's your name's company?
Who is that?
Jessica Alba? I don't think they have enough information.
Oh, they're brand new.
Yeah, they're brand new. We need 5 years of data, guys.
That's okay. Give us your thoughts on a brand new company. Joseph is maybe wondering about this new one.
All right, it loses $25 million, has $155 million in revenue, and selling for 5 times that for a retail business. It doesn't sound too great. Look at all these data points. Awesome, love it, nothing, I'm not gonna give a comment. Thank you. There's not enough, listen, if you want to trade this.
I'm sorry, Paul. There's not enough information for you, but there are people in this world who are trading this. Maybe give me your thoughts about.
If they're trading it, talk to Mo. If you're looking at it as an investment, it's losing money. Let it die. Let everything. IPOs are typically very bad. Let the market dictate what's going to happen. Let the company be more established, get more years of data. Wait till all the hype goes away. You might miss out on the next Google. Highly doubtful, because between Google and now, how many companies have gone public and then absolutely crashed? So I just ignore them.
Yeah, for our new folks out there, the best investors in the world, they look for really great companies, established companies that might have a moat, things have been around for a while, and then they look for a sudden dip or change in the stock price that doesn't necessarily match up with a change in the company financials. These are the key needles in a haystack we're trying to find. And so if you're interested in some of these more flashy stocks, these IPOs, these SPACs that come out, you have to be very, very careful. Sorry. Yes, that's right. And so just keep on your radar the idea that if other folks are hyping it up and talking about it, it probably isn't a good time to buy.
I do think, because it's Jessica Alba, she's getting a lot of attention. Jessica Alba is a beautiful woman. She's absolutely stunning. From what I understand, she built a great company. But again, it loses money and blah, 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 blah. No, thank you.
Should we have Joseph pick another one since he was so foolish?
Yeah.
Go ahead,
I always say, everybody, no banks, no insurance companies, pick companies with over 5 years of data, and preferably in exchanges, preferably on everything money software.
Mo, are people trading this company, honest company?
Nah, I mean, you can trade it, you can day trade it, but this is all we have. I mean, we only have, it just got a 50-day, I mean, it doesn't even have a 100-day moving average yet.
I see, you want to see a more long picture.
I want to see at least a year's worth of because I, like those stocks that I was doing before, I can go back and look at different trends, and I can say, oh, every time these things get down past all 4 moving averages, they can pull right back up. We don't have that here. So there's just not enough information. You can go and trade this on a 15-minute chart. That's perfectly fine. But for a daily swing trading, especially long-term, no.
Paul, what platforms do we trade on? Mo, what are you trading on?
I use Schwab.
I do Merrill Lynch and Schwab.
I use Fidelity, and I have a meeting with a Fidelity rep about how to. I don't think their options is very clear on Fidelity, but I might be wrong. If you're out there, go ahead, Mo.
In my opinion, every options platform, Schwab is my favorite options platform. Merrill is my second favorite, and then it's all downhill from there. So TD Ameritrade is one of the worst options platforms I've ever seen. E-Trade is pretty awful. Schwab is the best. So it's personal choice, but I think Schwab is the best as far as options go, as far as everything goes. That's just my opinion. Do you agree?
Yeah, Schwab's good. I'm at Merrill because I'm at Merrill just because I'm comfortable with Merrill. I used to be at Schwab and switched to Merrill for something, and I'm glad to a certain extent. But of course, Merrill did everything that every banker does. We're going to be here for you. Then okay, what about I moved over all my money? What about this? We can't do that for you. What about this? Can't do that for you. What about this? Can't do that for you. So go fuck yourself. But I like my rep at Merrill a lot. He's a great guy. And that's why I stick with them. But the second Schwab could...
What did he just say?
I said, go fuck yourself.
Okay.
I mean, listen, guys, every bank's the same. They promise. They talk about relationship, and all relationship means is, what can you do for them? Because relationship to me means, what are you going to do for me when times are tough? It doesn't happen with banks. They're not even times are tough. I want them to give me a loan, 50% on houses that are paid off and free and clear, generating tons of cash flow. No, we can't do that. Why? Because we got burned in the housing market. So you guys are stupid, and I'm paying for it right now? There you go. F you banks. Let's talk about bankers for a second.
Tim, should we discuss what's happening?
Yeah,
should we discuss what's happening next week, Tim? At what point are we going to tell anybody?
What's that?
You make the decision over the next couple minutes here.
For what?
You just settle. Don't get your panties in a bunch. What do you think?
This week?
No, I'm talking about next week. We have a dinner and a golfer.
Oh.
And we've never said a word to anybody.
I thought it was something pertaining.
Is that concrete? I mean, something.
Kind of like a surprise.
Well, we have a special guest coming on the show.
Tuesday surprise.
Okay, Tuesday. Next Tuesday. See you next Tuesday. We have a surprise guest.
Do not miss the live stream.
Do not miss the live stream. Set your calendar right now for next Tuesday at 2 p.m. Eastern, because we will have someone on the show that, if you follow our show, you are going to love to see speaking with us. It's going to be phenomenal. It's revolutionary for this channel, Paul. You don't coerce or collaborate with anybody. You give the middle fingers to most people in the world, except this person who's coming in. And so feel free to start guessing in the comments. You are going to love it. If you follow our channel, you are going to love it. And it's not stock Mo. You guys are so... I can assure you.
Do we put him at the board with Paul?
What?
Put him sitting down?
Oh, we're going to put him we're going to put him or her at the board.
Him or her.
We're going to get...
Them at the board.
We're going to put
By the way,
them...
did you see Finance with Rose, Investing with Rose? She got colored hair and stuff.
Yes.
I was surprised by that.
She looks great, Paul. You know that.
Well, she's making lots. She was in Wall Street Journal recently.
I'll be darned.
You didn't see that article I sent?
Probably not.
She and a few other guys. Oh, me, Kevin was on it.
It's not... Look at these.
Wouldn't it be great if I got Tiger Woods on, though?
Look, how do we get Warren Buffett on the show?
Yeah, I'd fly to Omaha and offer him $20 million to his favorite charity if we do it.
Charlie Munger on there.
I want Charlie Munger on. Charlie Munger and I are more of the same personality. He's slightly more eloquent than I am, but he'll just be, yeah, that probably, somebody was asking him.
Tell him it's okay to drop an F-bomb on here.
Oh, he would. But I don't know if he would. But he said something like, something about making lots of money. He's like, well, look at Sumner Redstone. That guy, his wife and kids hate him. So he has all the money in the world and his kids and wife hate him. Why would you want to be him? I mean, I just love the fact that he calls him out immediately.
It's we have Baker Mayfield. We have guesses for your girlfriend Kathy Wood. Wow, meet Kevin. That'd be great with the clown nose. Wow. Okay, guys.
Some people tonight, Paul's in rare form tonight on this video.
What's that? Oh, tonight's video.
Yeah, isn't this a rare form?
Oh yes.
This is a good one, guys.
Tonight's release at 7 p.m. Paul reacts to a fellow YouTuber who's very blunt. And it's discussing a very pivotal company that we always talk about. And Paul goes off the chain. We almost had him arrested out of the studio. We almost had to call the police because he was going crazy. And that'll happen this evening at 7. So gird your loins.
I know it's very rare for me to go crazy on
strap up your prophylactic.
Imbeciles.
Because Paul is coming at you tonight, folks. And no, Andre Jeek's never coming on the show. Okay, guys. Shall we keep going, Paul? Because if you guys would like to see a particular stock, you can give one more donation. We have ample time.
Yeah, let's get some questions in too, just like regular questions. Not could you do the stock?
Yeah,
Pay
sure.
for the stock. It goes to a good cause. Don't be cheap, et cetera, et cetera.
Rick is asking for Alibaba. Rick, we've done 70 videos on this in the past month. Go ahead and check those out. We'd love to get Joel Greenblatt on the show. Kanye West would be great on the show.
Would Kanye West be great on the show?
Probably not now.
Oh, it'd be epic.
Mike, like Taylor, did he still Taylor Swift's mic?
Kim Jong-un.
Yeah, when she was accepting the award, he took the mic and said Beyonce deserves it, and
Like push Seth over.
and then Beyonce came on one later, and I think she gave Taylor Swift the mic again and said, "Listen, finish your speech because Kanye is insane."
For those, would you have time to open what?
I would open my plan up the second I had a kid. The second I could.
What time would you open a plan for your kid? Yes, I opened my 529 plan for my children literally when I got their social security number, which is a great thing. And of course, which I just learned probably in the last 2 years, is open up a custodial account that works the same way, except they can do something more with the money. So yes, if you have children, Paul, we haven't done a real deep dive on that, Paul. We need to do that video. Kids, that's a great comment, guys. We appreciate it. 529 and custodial, just to get the ins and outs about what we're doing and how it works. Let's keep going. Paul, do you
Listen,
see?
AJ, you say emergency funds cost you money, but should we keep money for buying power? I personally believe
Go ahead.
that if you're saving for retirement, you max out your 401k and Roth IRA, and you keep a credit card active that you pay off in full, and that is your emergency fund. A lot of people criticize, why do you want to criticize? Guys, the point is it's an emergency fund, not you know what, I kind of want this thing, and I don't have the money right now, let me just put it. It's an emergency fund. I just lost my job, I just got sick, I can't pay my mortgage, I can't buy myself food. Emergency fund. And I know that, and by the way, I'm not attacking him when I say that, I'm just repeating to everybody else.
Sure.
But to your question, do what makes you comfortable. That's what matters. I believe in having cash for investment, for this, for that. I have way more cash in my personal checking account than I will ever need, and it's going to cost me a ton in retirement. Difference is, I'm not going to retire, and I already have plenty. So my situation is different, right? And even that money in my personal account, I'm putting towards momentum trading to make some money off of it. And I'm going to use that money towards upgrades to my house, things like that. That way I never have to go to my business and take money out of my business to go put into my house or do fun things that I want to do. That's the way I operate. But everything is individual based, but first and foremost, max out your 401k and Roth IRAs, and every tax-free account, tax advantage accounts you have, max those out, and use a credit card as your emergency fund. Because if you sit there and worry about, we all have friends, we all have lots of friends. Think about how many of them needed an emergency fund that they weren't being financially responsible to begin with. When the recession happened in 2008, how many friends of mine said to me, the recession killed, how many people I knew said the recession killed me? No, your spending killed you. You made $300,000 a year and you spent like you made $500,000 a year. So when your income fell to 100, you suffered. That's not the economy killing you, that's you killing you with your spending. There's a big difference.
Talk about the savings, this 401k or 403b. You have access to this. It's not gone. I mean, you do get penalized on your gains if something horrific happens in your life.
A penalty. You get taxed and you have a penalty. And you can borrow against it in the future. If you really have, and guys, it's such a low incident. Now, you might sit there and say, well, Paul, guess what? Your 401k and Roth IRA are untouchable by creditors. So let's say you have an emergency, you declare bankruptcy, that money is still going to be there for you. So you're crazy for taking money out of the earliest years of your life and career to save up 6 months, which might take you 4 or 5 years to save up, and then just stop with that. It's the most cliche and overdone, talked about thing by a financial planner. It makes you want to go, but if you had, everybody's personal. Psychology of money taught us that. It's all about our personal experience. If you grew up in a house where your mom or dad lost their job and you guys were destitute because of that, you're going to sit there and say, I need an emergency fund. But the right financial move is not that. But I will never, ever tell you to do something that doesn't make you sleep, doesn't let you sleep well at night. You just have to know it's going to cost you multiple 7 figures in the long run. Do
you have any tips for teenagers who are starting to invest?
Yes. Figure out a way to make a side hustle, whether it's cutting grass or anything, save $200 a month, put it in an account, and start saving.
Gio sells popsicles at his brother's baseball game.
Perfect. How much money does he make every single time doing that?
Maybe like $12 or something. But
he saves and puts it towards there. Gio's gonna be a very wealthy kid someday. Get them in the whole point is getting them in the habit of saving. It's not about how much they save. It's getting them in the habit of saying, oh, I made $200. I'm going to save 150 and put 50 towards something fun. That's the point. Because you have to live well too.
Let's throw it into the retirement calculator.
What's that?
Like a 16-year-old kid and
Oh, this
Well,
is great,
the only
Tim.
problem with that is, Tim,
Just show it off for a moment. I mean, anything.
well, the retirement calculator is great, but
Because this is is it the Psychology Money where they talked about the reason Warren Buffett is so wealthy is he's just been doing it for
Yep.
80 years. And so, like, show folks, this is so eye-opening. Put in any numbers at all. So this is the retirement calculator, folks, that you get as a member of our Everything Money community. You get access to this, whether you're a patron or you go to everythingmoney.com. You can sign up and get this. This is very, very eye-opening. My wife and I lived with the burden that we weren't saving enough. And we were saving a ton, Paul, when I got my first job. But you're looking at a guy that saved $0. In fact, I was in debt until 30. And then basically from 30 to 35, I saved about $30,000 a year. And now I have like $500,000 saved up at 40 and projected to be a nice life moving forward. So, but looking at these numbers is incredibly eye-opening, and it will certainly almost be worth the price of the software for the next years to come, Paul, just doing this one time.
100%. So guys, I'm starting at age 16, going to 65, zero savings currently, saving $2,400 a year, increasing that by 5% a year, getting 9% return, while you're saving 6% retirement, live to 100, so you have 35 years of retirement, inflation's 3.5%, current income about $5,000, you wanna live off 11 or times that amount, hit generate, you don't have enough, you need to save $1,624 more per year, so let's put this to $4,100, generate, you have enough, look at this guys. At retirement at age 65, saving a little bit more every single year, you'll have $6.5 million, and it's gonna grow forever, basically. Not forever, but you know what I mean. Just from saving just starting with $4,100 a year. And I know it sounds crazy, but how many people wanna support kids in their neighborhood? Go get a lawnmower, cut people's grass, go work somewhere, go sweep somebody's drive for $10. It does not matter. Get them in the habit of saving. That's what matters.
AJ is saying he 100% agrees, but keep enough money after maxing retirement to pay bills and invest the complete rest weekly. I don't know why I'm reading that. Sorry. There are people asking, Paul, do we, if I have a sum of money, do I put it all at once, or do I space it out over the next few months?
Do whatever makes you feel comfortable. If you want a dollar cost average over 3, 6, 9, 12, 18, 24 months, do that. Just remember, you're going to dollar cost average up and down. That's the way to do it. I don't put all the money in immediately. If I have a lot of cash I want to deploy, I put it in little bits at a time, but you've got to do what makes you comfortable.
Tim, does our software have Australian companies?
no, not yet.
Canadian companies?
Yes.
Yes, Canadian companies. Thank you. Sorry about that. All right, guys. Enjoy. Let's keep the everything coming. Guys, let me bring it home here for a moment. There's some interesting trends going on, Paul. You might not even know this, but Tim and I were looking. You're actually watching already, Paul. You might not know this, but in this short time, we've been doing this for 3 years, but in reality, we really started hitting our stride about a year ago when we got our first 1,000 subscribers, right around September.
Actually, September 10th or something like that, we got 1,000.
You're actually currently watching. It might not look in terms of numbers, but as the months progress, you're in terms of views, subscribers, you're already looking at one of the top financial YouTube channels on the planet, Paul. These numbers are astonishing.
And what did I say when we first started the channel?
The people who have hundreds of thousands, if not millions of more subscribers than us, they don't get as many subscribers as we do on a daily basis. They don't get as many views as we get on a daily basis. It's astronomical, Paul. These people
we
out there.
We only hit 78,000 subscribers today. And I always said, guys, we're going to be the #1 finance channel on YouTube. I actually believe we already are, except for the fact that the subscribers don't validate it.
For example, Chicken Genius Singapore, we reacted him he's got hundreds of thousands. Paul, he gets 33 subscribers a day.
Yeah, it's
We
garbage.
get 300. It's astonishing that folks, thank you for being along for the ride. It's been incredible. We haven't even started with 78,000 subscribers, but we've laid the foundation.
And the software hasn't even started. You guys who subscribe to the software, you're getting an astronomical deal. You have no idea what's in store for the software over the next few years. It is going to be absolutely effing incredible. Literally, it's going to be incredible. And if you don't believe that, then unsubscribe from the channel, unsubscribe because it's absolutely going to be incredible. I'm still blown away when people cancel a subscription. I'm like, what are you, stupid? And I'm like, okay, then they realize when it's double the price and it's worth it, they're gonna be like, man, I wish I'd signed up back then.
Paul, we should do some reaction. Actually, Clem is saying, what do you think of the Money Guys or Jasprit Singh, Minority Mindset? I think you've seen this guy, Paul. Minority Mindset. I think he's either a Sikh. He wears the sort of turbanish thing. And he's very sound YouTubers. I've watched him before I even was on the show, Paul, like looking at him. So maybe I'd love to look into these guys. Maybe we can react to them, if not get him on the show. But yes, we do have a very large guest. The largest guest we've ever had, even in all of our 3 years, Tim, is coming on the show next week. What's that?
Well, physically probably, because Mikey's a small boy.
Yeah. For you patrons, we have a couple announcements as well. On Thursdays at 2 p.m., we are no longer doing just the top tier, right, Tim? We are doing. We're going back to our glory days of an all Patreon exclusive Patreon. Sorry, Paul, I keep saying Patreon. Everyone in the Everything Money community, whether you're a patron member or on the everythingmoney.com, which again, we're going through this transfer, we'll have an exclusive live stream just for you. So the 2 p.m. Thursday live stream will now be open to our entire Everything Money community, which is incredible. And so bring your questions. You get direct access to all of us. Any question goes, of course, especially about Paul's sex life. And what else, guys? And then the final thing is the fireside chat. Is this Friday for you patrons as well?
It's the last one.
The last fireside is, we'll go into why that is, this Friday at 6:30. And say again?
Next book club is 24th.
Oh, okay. And the next book club
is the 24th. The book club was fabulously successful. It's going to be huge. It's going to be awesome. It's just going to grow. Jacob, you cannot invest in EM, unfortunately. Nobody can invest in really Crossroads in general. It's a privately held company. We actually shoot for no cash flow. Hear me out. Because we believe in growing. So we invest our capital money into growth. For example, our most profitable, I'll just be open about this one. Last year, our real estate portfolio did about almost $2 million in free cash flow. And this year it's going to do $0. Why?
cash from operations minus capital expenditures.
Why? Yeah, we're going to put a ton of money into the properties. A ton. Why? Because we think that $2 million is going to make us $6 million. Mm-hmm. So I have no problem doing that. But that's why we understand the financials of companies. And really, actually, by the way, every company's capital expenditures should be split between maintenance and growth capital expenditures. They don't do that. But that's an important aspect to look at, because there is a difference between growth capital expenditures, like building a factory, versus maintenance capital expenditures, replacing a roof on a factory. They're very different things. But we don't believe in free cash flow. We believe in, as EM does better, my brother and I just always discuss, okay, what do we do with the cash flow from EM? How do we grow our businesses that way? Hiring more salespeople, spending more in advertising, rehabbing properties, buying more properties, like we're buying that house in Turks, then Costa Rica. Our goal, we make enough money to pay ourselves a great salary to live off of, and then reinvest all the money back into the company. That's all our plan to do is. That's it. I don't give a rat's butt about, at the end of the day, as long as we have the cash flow to cover everything we do for growth, I'm happy.
Everyone keeps asking if we're going to react to Jeremy from Financial Education about the tattooed chef drama. The answer is most likely no. I mean, I have a lot of inside information from what he does on his end, but in general, again, like other YouTube channels, he has almost 10 times as many subscribers as we do, but he does not get the daily views and subscribers that we do. So people, unfortunately, they sort of claim that we've been clout chasing, even though people select art. They see what we're doing and they want to get on board. We will surpass all of these channels, including him, within the next couple years. So it's really going to hurt when we wave goodbye to them as we pass them. So incredible.
So let's answer some great questions here.
Go ahead, Paul.
You should do a video going over Crossroads financials. Yeah, that's not going to happen. I mean, I'll be very high level. I have no problem discussing that. But going to the financials, we got a lot of. The other thing is, like, our real estate, our books. We might have all of our houses on our books for $3.5 million, and they're worth 10 because we bought them so cheap. Let's see. What are you guys giggling at?
Well, so people want to know your thoughts on uranium. I know you don't have any, but I also got an alarming email today, folks. I have a company, which is my DGF spray. It's a graphite spray. And I just got an email today, Paul, and I shared this. If you're interested in steel, if any of you are interested in steel or the mining of the metals that go into it, I was just alerted that this year the steel companies will be charging my manufacturer is not a 4% increase, but a 65% increase in steel prices coming for the next year, 2022. So if you're interested in steel, it sounds like it's not a steal of a deal out there at the moment.
So can you explain the difference between net income and free cash flow? Why are they not exactly the same? So remember, net income includes a lot of depreciation, amortization, etc. Free cash flow factors in net income as the first line, but it adds back in all the non-cash expenses, gets your cash from operations, and then subtracts out your capital expenditures. The things you do for growing the business, like building a new building, putting a new division on, whatever it is. But over long periods of time, those should be very similar. But free cash flow does not factor in depreciate, it adds that all back in. Net income is all the numbers from all the accounting rules and SEC laws and all that stuff that are factored in there.
Yeah, people are recognizing that you did name Crossroads after Bone Thugs and Harmony. That's a Cleveland group. We do love that.
You know, I tried to get Bone Thugs and Harmony to play at my brother's wedding, and they had a gig that day in Australia.
What were they going to charge, you think?
12.
12,000?
Which I thought was very, well, they typically do 18, but one of our employees was good friends with them. He said, hey, listen, I can get you a discount for Nate. Nate was a good friend of one of the guys.
Mo, is anyone day trading Apple right now with the?
I'm sure they are. I'm sure Gianni is. They did their what do you call it?
Oh, I'm sure Gianni is. Yeah, go ahead.
Yeah, I mean, I'm sure he is. Let's see. I just want to see what the volume is. Yeah, so 81 million trades, averages 79 million shares traded per day. So things are taking off after the event. Which was rather disappointing in my opinion.
Chris asked an interesting question, Paul, and I'm not too privy to what is discounted cash flow model as a pillar. What is that again? I'm sorry.
Discounted cash flow model is just taking all your cash flow, discounting it today at a certain rate, and determining if the price today is above or below that number. It tells you whether to buy or sell.
What do you mean discounting? I don't understand.
So if I were to give you, okay, that's a good question.
Thanks.
So if I were to give you $100 a year from now, what would you pay me for that $100 today?
I would want to pay less.
Okay, so let's say you want to make a 10% return on your money.
Yeah.
You would divide this by 1.1%, and that's $90.9. That's what you're going to pay me today. That's your discount of 1 year. That's a discounted cash flow. Now, obviously, when you have cash flow of 5, 6, 7, 8, 9, 10, you want to discount, you want to make all these what would you pay today to make a 10% return on that? I can't do that on here, but I can go in Excel, put in all these numbers, put in 10%, and it has an Excel function for discounting all these numbers, and it'll say, Paul, you need to pay $25. I don't know what the number is. You need to pay $25, and you will make a 10% return on this future stream of income. That's a discounted cash flow.
Someone else said, I'm 25, currently unemployed with 50 grand saved. Should I invest it all?
You're 25?
Yeah.
50 grand saved, unemployed?
Congratulations.
First off, how are you unemployed?
Well, I mean,
there's no jobs available.
I mean, there's literally
I see.
No jobs
10 million
available.
job openings and like 6 million unemployed people. Either way, my personal opinion is go max out your 401k and your Roth IRAs over the next few years. Get that money in a tax-free account. I don't know your other situation. Get a job.
Yes.
And unless you're like, oh no, I'm in school. Even in school, go invest the money. Because at 25, then when you're 65, that number could be, if it doubles every 8 years, let's say, 5 times doubling, that's 32. 32 times, that's $800,000 right there.
Yeah. And
no, 50 grand or 25?
50 grand.
Oh, it's $1.6 million. It's $1.6 million in retirement.
Yes,
that you have sitting there.
Freestyle, it just depends on what's going on in your life. But yes, that's just a massive amount to have saved. Congrats on that. Someone else is saying Baba keeps dropping. Is that true, Mo? What's going on with Baba over there?
Yeah, I mean, there was some news that came out today about the regulatory stuff in China.
Yeah, they keep
no
going,
surprise.
huh?
Rest of the market is kind of falling. You know what's funny? There's people in the chat that are saying the market's tanking, the market's tanking. The S&P is down 0.6%. So it's funny what we think of as a tank nowadays because stocks only go up.
Let's see. Also, can we include someone's Kenny? I love you. No, I love you. Dividend variable in the screener for us dividend investors. Paul, what do you think?
Well, we don't have a screener yet, do we? Oh no, at the beginning, the screener up here. Do we have dividends up here?
No.
We don't. We could add that.
Okay, good idea. Thank you.
Add that, Tim?
Thanks, Kenny. Yes.
All right, cool. We'll add the dividends to there, like the biggest dividend payers.
Chinchudo is saying, can we do a demo on how to sell a put in Fidelity? We will get to that, folks. As this show grows, and as I say, as we surpass all of the other financial, maybe besides Graham, Andre.
We'll pass him.
Yeah, we'll pass him. As the channel grows, we will be devoting more and more of our time and effort toward it, of course, and we'll be doing more and more of this, especially options. And we're learning ourselves, momentum trading and options. Mo knows them quite well, but what I mean to say is I'm learning, and so are everyone in the Discord community. So what was John saying? Oh, yeah.
Here's a question.
Go ahead.
If we haven't got a mortgage, should we be focusing on getting one and putting the majority of our money towards it, or should we put it into an ETF?
Well, do you need a house?
Do you need a house? Do you have a paid off house? Get a little more information there.
A lot more information.
Yeah.
But in general, we are big fans about not paying your mortgage off early at all
correct.
whatsoever.
Don't listen to the whole, you're going to save all this money in interest. It's not about how much money you save in interest. It's about how much you pay in interest versus how much you can make over the life of the loan.
Guys,
over a 30-year mortgage paying 3%, I'm very confident you can find investments to beat 3% return over a 30-year period. There might be some volatility, but you'll beat 3% over a 30-year period if you make smart investments like the ones we talk about here.
And people that are asking for options, Paul and I have done a couple of Patreon-only videos. So go in there and find them in the Patreon. They're all about options. We sat down one day and went through it. And the verbiage is the same. So the person that asked about on fidelity, the terms are the same. It's sell to open, buy to close, etc. So those are exactly the same. You just need to know what words to put where when you're executing the trade.
That's a good question.
Go ahead,
AJ, what's the highest rate you wouldn't pay off? It's not about that. It's about how much cash do I have, what are my cash needs in investing, and what kind of returns can I get in that investing. If you have 1 year left in your car loan and it's charging you 2.9% and you owe $10,000, you have $50,000 in your bank account, I'd pay it off. Why? Because you're going to beat the 2.9% beats what you're going to get in your bank. You're probably not going to invest. And by the way, if you have plenty invested, right? If you have plenty invested and you plan on keeping the $50,000 in your account, pay it off. I don't have a car note. Why? Because I have plenty in my bank account. But if I all of a sudden invested every single dollar I had, I'd probably get a car note. Why? Because I can go invest it at higher rates of return, even though I'm wealthy. Now I'm being dramatic here. I'm being extreme. But if your cash needs are all met, all your investments are maximized, and you want to have 50 grand in your bank account, but you have a $10,000 loan for your car, pay it off. It's a year out, pay it off. 2 years out, pay it off. 3 years, fine. But if you have a 30-year mortgage, don't pay it off. Because are you really going to invest that $50,000, that $10,000 of your car loan in the next year and beat 2.9% somewhere? Maybe, but that's a 2.9% guaranteed rate of return. The U.S. government for a 2-year loan right now, 2-year treasury is paying you 0.7. I don't know what the number is, 0.5, not even.
Yeah, it's
just
small.
pay it off.
Graduate investor said, Paul, listen to this. I'm 26 and I have a 140 grand portfolio, 31 in my Roth. I have a decent amount of dividend stocks. Paul, people are in love with these dividend stocks that pay about $5K a year. Should I keep my portfolio this way or focus more on growth? And I would say hesitant on the growth.
Focus your portfolio on value.
Yep. Value, not growth.
Value considers growth, but value doesn't overpay for growth. When people concentrate on growth, they just say, oh, what's the fastest growing? Let's go buy them. Then what usually happens is those stocks are massively overpriced. Focus on value. Value factors in growth. As you can see from our stock analyzer tool, it factors in growth rate, revenue growth rate, factors that in there. Just focus on value buying.
Can you show a graduate investor what, you got to pull up the retirement calculator real quick. I have to see what 140K at 26 looks like. Even just conservatively speaking, put it in SPY and go to bed at night every day.
100 and what K?
140.
Is he adding to it every year or just one time? We're going to do one time.
He said dividends are paying about 5K a year.
It doesn't matter. That's all factored in there.
Okay.
Annualized return, let's say 9% over 40 years. Retirement age, annualized during retirement.
I mean, this is going to be a ton
Let's just
of
assume
money.
just at retirement what you're going to have.
Yeah. This is the software you get if you join the Everything Money community or the Patreon. They're the same thing.
At retirement, you will have $4.4 million based on a 9% annualized return.
Incredible.
Yeah. So you're just looking at 4.4 million, and every single year you add 10,000 or 15,000 to that, you're adding a lot of money to it.
Here's one I got. This person said, I don't like that you play down these regulations so much. This is serious stuff and you should really address it. So many viewers are in BABA. 2 things. First thing.
Don't be in BABA.
First thing. This is why we're not telling you our portfolios
Exactly.
anymore, because of this crap. Secondly, if you look at the structure that Alibaba and many of these companies are right now, they're being taxed.
I would stop.
I mean.
No, just do this. You're right. Sell your BABA.
Okay, sell your BABA.
Everybody sell BABA.
Yep.
That's true.
Listen, this is why we stopped showing our portfolio, because we don't want people. I'm okay if Baba goes to zero.
Yes.
You are not going to be okay if Baba goes to zero.
Folks, this might sound harsh, but Paul looked me in the face and said, sell your Baba. You can't handle this shit.
I literally
Just
looked at him and said,
yeah.
Seth, you are not made for investing. Sell your Baba, focus on your ETFs and your money. And even the money that book that beats the market, I go, you got to stop touching that.
Which very well might be true at the moment if I don't have a full grasp.
I was like,
on this, folks.
guys, this is not for the faint of heart. It's very difficult. And guess what? Every company has a reason why it is bad. And every company, I just look at it saying, is it being overly dramatized? That's it. If you don't like it, if you think we're not factoring in, sell your Baba. Just sell it. I'm going to continue buying, and if it goes to zero, it goes to zero. If I lose half the money, it goes, well, okay, great. I've made much bigger mistakes in my I'm looking at myself. That's why Baba is one stock. I'm buying 30 of these things, 30 different Babas in different names. I will be wrong on a few of them. Several of them, I'll be massively wrong. I don't care, because on other ones, I'll be massively right, and it'll make up for those. That's why I don't like talking about the one stock. That's it.
Paul, what are your opinions on investing with margin and leveraged money?
Absolutely do not invest with
terrible
margin
idea.
and leveraged money.
Yes, absolutely.
Please do not do it.
Well, what percentage of my money should I allocate to crypto? Our opinion is zero, Harry. But
If you want to trade crypto, learn a process for trading, and that process doesn't care about anything about the fundamentals behind the stock, the equity, the cryptocurrency, anything like that. I do not invest in crypto.
Reeks is sending love from Sweden, and he's just simply asking thoughts on Intel. We've done a zillion videos on Intel. We absolutely love it, and you can just go back and search our videos. You'll find all of them. What else, Paul?
Clem, that's funny.
Clem is hilarious. I mean, he
GME
must
to
be
the
new.
moon, Baba to Uranus.
Uranus. But Clem, I love you already, baby. Billy's here. I love to see Billy again. Kenny's here. I love it.
I don't buy CDs, AJ. I actually buy 90-day treasuries that pay me 0.04% a year because I want the liquidity and be able to jump on something when I need it. I would sacrifice the yield for that. It's a great question, by the way.
What's that,
AJ's
Paul?
had some really good questions today.
CDs used to be really good.
Yeah, but CDs, do I buy CDs? I do not buy CDs.
Yes, I used to have some money in them.
In 07, I was getting a CD at 7% return.
Me too. I loved
And I was
it.
like, man, this is great. Now you go, it's like 0.25%, and if you open a checking account, they'll give you like an extra bit.
Yeah. Tim
So
is
funny.
saying, Tim, I'm a new member. How do I get notified about the member-only presentations? We send out, let's see, Tim, make sure on desktop you hook up your Patreon, or when you log into Everything Money, hook up your Discord. But we announce these in Patreon. We announce them on the Discord channel about these member-only exclusive events we have.
Soon it'll be on
Everything Money. Yeah, pretty soon. We're developing the everythingmoney.com every single day. 5 or 6 developers are working on this around the clock, and they're doing great. So, all right, Paul, what do you think, baby?
I think we're all set here. I think this was a great live stream. I love all the questions.
Yeah, you guys are incredible. We could keep going, but we will save this for our patrons. All patrons are welcome to Thursday at 2 p.m. and a fireside this Friday, 6:30 p.m. Eastern. And yeah, we're giving away a Tesla in the fall when we hit 100,000 subscribers. So get into the community. You're automatically entered. That's our take, Paul. You know I love you. Mo, I love you. And I love our
See
followers
y'all.
all over the world. See Mo in the morning at 9 a.m. And keep calm and 8 pillar on. We love you guys.
How about love, love?
The hell is that?